What's up, my fellow traders? Hope you all having an awesome day ahead. So let's quickly start our analysis with nat gas, gold, silver, crude oil, starting with natural gas. So before I continue, let me tell you something, guys. Whatever I teach you here, I personally do it myself. And I take my trades, especially commodities, I take my trades with absolute great conditions. If I see a weakness in a condition, I stay back and wait for the best set. For example, right here, I have not taken this trade because, as I mentioned in my last video, that I want to see a candle to close above the wick as well for the strongest entry. This might play it out, might not, but for me, that is a weak entry. Right here, that was a valid entry. Again, that has not covered the wick right here, but still a good momentum candle. I might have taken this trade, but not this one. I might have not taken this as well. That is why I have not sent this as a trade alert. I personally taken this trade, which was my bearish engulfing trade right here, that has hit my take profit, and that was also sent to my members. So when I see a good condition, I send it to the members, then we have a stop loss there and take profit there in case the things goes wrong. Also, I'm still not completely bearish for natural gas, and I've been repeating that from last couple of videos, unless and until we are not close and broken below 3.199 here on Ovanda, 3.308 on capital.com, and 3.246 here on NEMEX. I've just redone the zone for NEMEX. So as long as we are not completely closed as well, in that case, I'm still not looking for bearish trades. Now, if you remember when the zone was broken, right here, and we were looking for the entry condition here, once the price broke below the zone, I sent these zones to my members and told them to sell from here till here, buy from here till here. So that is how I take my trades. Once this zone is broken, I'm going to sell from here till here and buy from here till here and exit my trade. So that is how my system works, and it is really easy without any confusing statements. For example, crude oil, I've taken this trade. Now I've connected my broker here, IC Markets, and I just want to show you all for the keyboard warriors who sometimes come and just want to criticize only, not looking at the big moves we have captured before. Right here, crude oil, that was my order. Half standard lot has been placed, and I've closed this trade, just a quick scalp. Now, this was the trade I've been mentioning from last couple of weeks, which is my valid head and shoulder pattern, but I chose to go for the good scalp in this account right here. I've just cut this trade just a couple of hours ago. And don't look at these indicators at this point. I'm still testing that. Once I have a good results, I'm going to share that with you. I've taken this trade according to my own rules. It is also one of my own personal creation, which I'll share with you in upcoming months. And I also want to show you a losing trade which I placed yesterday. Right here, my stop loss was hit. That is fine. I've re-entered this trade as my condition met for the students. A shout out, a second chance entry we got here, and that has easily recovered my loss. So when my rules are met, my conditions met, I take it. I don't get scared with these type of losses or anything like that. So keep your trading simple and stop listening to the noise out there. Stop listening to the people who tell you the stuff they don't even know themselves. Follow someone who has the proven results, who have the proven strategies, who show you all these stuff free on YouTube videos without asking you to buying the courses. But yes, courses are something that will help you to cut long learning curve. Other than that, I still show you lots of valid entry here, especially big moves free for you with gold as well. These big moves which I'm going to talk about in my analysis part. So let's start with natural gas, capital.com. So for now, price has just formed a first bottom. We had a pullback and a second bottom. Now for a good double bottom entry, again, wait for an engulfing candle. Now in this case, it doesn't have to engulf the wick, but it must engulf the body of the previous candle. Just a green candle will be very aggressive entry, and I will not take that. If you want to take it, still valid, is totally up to you, depends on your own risk management. It will be risky entry as well because there is no oversold and there is no divergence. We might see a divergence with an engulfing candle, something like this, but again, it's going to be risky entry. Make sure if you want to take this trade, take it on your own risk and be careful with the risk right here. So simply, I'll mark my rejection zone here from the body to the wick, which is right here, and all I want to see a next candle. This must close as a red candle, and the next candle must close as an engulfing candle. Once we have that, I'm going to go long by keeping my stop loss below. Take profit can be 1 to 1, 1.2 to 1 or 1.4 to 1 if you want to manage your trades. So very simple. Keep looking for a buy condition. If there is no condition and the zone is broken without a condition, then I'm looking at this level and I will start to sell this market with a pullback with my condition bearish engulfer, and I'm going to go short till this level from where I will buy natural gas. For now, if there is no buy condition, I will still look for the pullback and bearish engulfer below 50 EMA to go short. So simply engulfing candle or a nice pin bar, 382 candle exactly like this. I won't be taking my trades with a green candle. Again, that will be valid. It's totally up to you if you want to take it. So very simple conditions we are looking here on natural gas. On Ovanda as well, nice engulfing candle I want to see from my rejection zone, which is right here. Engulfing candle will confirm my entry with stop loss and take profit as well. Again, weak entry because we have just two confluences. At least I want to 3 to 4. Number one, we are in the zone. Number two, price forms a condition within the zone, but looking at double bottom, I can take a risk with a low lot size. So keep an eye on double bottom, otherwise bearish engulfer below 50 EMA for sell trades. Once zone is broken, we are looking at the level below, which I'm going to keep you guys informed and sent to the members once this zone is broken. Exactly here on Nemex, the zone is right here. I've already mentioned. Keep looking for your double bottom trades, which is right here. If there is an entry condition, engulfing candle, that will be my buy entry. Again, that won't be a reversal. It could be a bounce that is enough to take your 1 ATR, 2 ATR or 1.4 to 1 reward to risk ratio targets, exit, come out. Because in a downtrend, we might get these bounces and then price might fall back down. So this is the bounce we need to capture. That is all we need to look here. Audience here, MCX, keep looking at and keep an eye on this zone below, which is 253 goes to 268.9. That is all I'm looking at for you guys. Just look for the pullbacks, engulfing candle, bearish trades only till you are in this area. So there is no conditions for you here on buy, but a pullback is expected with bearish engulfing pattern from this area. If the price hit this zone, forms engulfing candle or double bottom, then this is the only area from where I'll be looking to enter my buy trades if you are looking here on MCX charts. Coming here on gold, and what a big move we have captured yet again. If you are my student, then this one single move can give you insane amount of money. We have captured this move, we have captured this full move, we have captured this full move, and we have captured this full move as well. So if you combine all these trades, that is more than 50,000 pips here on gold. That could have made you rich as well. And the only move that didn't play out was somewhere here, but still we were managed to capture a move till 786 retracement here as well. That could be a break even, still not a loss. So let me show you the clip from my last video so that we can connect the dots from there. Use a lower level that is good for the pullback. In that case, your pullback can come all the way to 50%. That is going to be a nice entry and a nice pullback and a good confluence. So all the way from here to 786 retracement to one level, you can take your trades. It can still go up to 1.618 retracement. Again, that's going to be risky. If you want to manage it by moving your stop loss to break even, that is something you can still do. Now, gold is pushing up nicely and have retested 50% of Fibonacci retracement. And for aggressive traders, like I mentioned in my last video, that is your buy limit order. Take profit 1 is right till here, which is 3,000 pips. $30 take profit 2 can be right here at the level 1 of Fibonacci retracement, which is 5,000 pips. And TP3 is right here, which is a very big take profit, which I would manage my trades like this if you want to manage till the upper level. Awesome. So this move was already mentioned. 50% order was hit. Take profit 1 was hit. Now, personally, I have exited my trade right here. That is all. Because for the commodities, I'm very careful. I pull the money out of the market and come out. I could have managed till here. If you're someone who is managing this trade till here, that is fine. Make sure you take your profits, because not taking your profits is as risky as not placing your stop loss. So make sure you come out. We are in the overbought situation. Next engulfing candle will confirm the correction, and I will capture this move as well if we have a bearish engulfing candle here. According to the ATR, ATR is $26, so I will go $26 or 2,800 pips move if we have a condition right here to go short. So keep an eye, expect a correction, but with bearish engulfing pattern. Now with that correction, I also look for an opportunity to capture my pullback entry bullish. If you have a pullback, price forms engulfing candle, which is my pullback entry bullish. If that happens, I am gonna go long from there. So keep an eye. These are the conditions. Now I'll be looking at simply buying gold with a pullback engulfing candle above 50 EMA and right along with the trend. A nice trending market here on gold and very uncertain market, but the gold is not very uncertain. The conditions are very clear in this trending market. All we did is ride along with the trend by taking some badass trades which we had. So keep buying gold with the pullbacks. Here on silver, nicely broken above, which I've clearly mentioned yesterday that once we are broken above this accumulation, price will confirm the trend towards the upside. With this break and pin bar, how nicely it pushes up. Let me show you the clip from our last video. Now price is just in range mode right here, and soon you will see a nice breakout. With a breakout, it will confirm the price is going to push up if we have a breakout above, and then I'll start to look for my buy trades. Perfect. So as you can see, the price is nicely pushing up. There is no condition, but with accumulation, there is one strategy I used to trade on smaller time frame. That would be my entry, but don't worry about that at this point. Simply look for pullbacks engulfing candle above 50 EMA and keep on taking longs till the price gets to the next level of major resistance, which is right up there. 34.42 goes up to 3500, from where we're going to enter our counter trend sell trade with bearish engulfers or double top entry conditions. So that is all I'm looking at. Not looking for anything else except buying silver. Now the silver also formed a zone below, which is right here. 31.17 goes to 32.05. That has now turned as a trend continuation bullish zone from where I want to see a pullbacks and an entry condition. We can also use Fibonacci retracement once this candle is closed. Very important, once this candle is closed, I will plot my Fibonacci tool all the way from here to the zone below. Same like gold, pull back to 50%, buy limit order, take profit 1 here, take profit 2 here, take profit 3 right here. So it's totally up to you how you want to go for it. Otherwise, less aggressive entries, pullback and engulfing candle above 50 EMA. So very simple and very easy. Here on crude oil is nicely pushing up out of my head and shoulder pattern. I've just shown you my trade, my real trade. I'm out of this trade. It's totally up to you how you want to take it. It is my own strategy, my own account. Some accounts I go for the scalp, some accounts I go for the long term. But from here, we already had an entry condition right here, and I'm still expecting a price to head higher. Once we are broken above 50 EMA, then we are looking at pullback entry bullish. That is all we are looking at till the level above, which is the next major level of resistance, which is 65.10 goes to 66.49, a level from where I'll be looking to enter my counter trend sell trade. So keep an eye, expect a push up and then a push back down from this zone. Once we are broken above 50 EMA, just simply look for the pullback and engulfing candle to go long from here. Otherwise, this head and shoulder pattern has been played out all the way from here, and we are nicely pushing up and expecting a further push up out of crude oil. So that is it for today's video. Hope you got a value. If yes, give this video a thumbs up, subscribe if you're new, so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next video. Till then, take care.